Some of these multiples are insanely high. It means that if you gave the company $100 today, it would take you 100 years to get the money back. Shoot, man, I mean, you got Elon Musk. I love the guy. All I'm saying is just from a fundamental analysis, financial analysis standpoint, I think the company is overvalued.
Hi, in this video, I get to talk to an old friend of mine named Tony, who is an investment banker at Deutsche Bank. We start off the conversation talking about what investment banking is, the different products institutional investors have access to versus retail investors, and we end the conversation talking about Tesla. This was recorded on Sunday before the recent correction, so a lot of what we talked about has actually started to come true. The moment Tesla purchased Bitcoin, I suspected that volatility would increase, but this is also due to Elon's own making because he's the one who said Bitcoin is too high. My theory is that Elon wants to prevent a future larger bubble pop by preemptively bringing down the stock, just like when he said himself Tesla stock was too high. But I digress. Please enjoy the video. This is part one of a 1 hour conversation. It's a bit dense, but I think it's very, very informative. That's it, and enjoy. All right, so today we have Tony Zhang. You graduated summa cum laude from the University of Michigan studying industrial and operations engineering, and then you studied at the London Business School where you got an MBA, and now you are Vice President of Investment Banking at Deutsche Bank. Welcome to the show. I don't have a name for the show, but we'll just call it the show. How are you doing?
Good to be here. You're exactly right. You know, my background started out as an engineer. I did my electrical engineering and a master's in industrial engineering from Michigan. And after that, I spent most of my time in Silicon Valley, actually. First at consulting, then later was a client of mine, Beats by Dr. Dre, you know, the headphones.
Yes, I do.
And later on went to, after Beats was sold to Apple, went to London Business School where I got my MBA. And that's kind of where I stepped into the world of finance, which, you know, I'm still in right now, you know, after a good 6 years. It's been a lot of fun. And, ever since London, I moved to New York and I ended up working at Deutsche Bank as a vice president in their investment banking group for TMT. So technology, media, telecom, those are the verticals that I cover in the banking world.
I totally butchered it. I said Deutsche. It's Deutsche.
Deutsche,
I should
that's
have,
right.
yeah, Deutsche Bank. For us who are just regular mortals who don't know that much about finance, investment banking has always had this mystique to it because we just know that it's a job that you can make a lot of money, that you have to be very smart at. But could you explain to us what exactly is investment banking?
Sure, absolutely. I think a lot of people enter into this industry. It's also because the monetary, reasons, and there's that certainly there's that allure to it, but I think investment banking in general, it's still a very good industry to be in, even if it's not just to go there to make money. Investment banking opened you to a lot of financial products that most retail investors don't get to see at very high 90,000 feet level. Investment banking, it's about helping companies with their strategic decisions when it's finance related issues, right? So merger acquisitions, right? Company A wants to buy company B, or IPO, a growth stage company that wants to become public, either normal IPO or via SPAC, right, which became very popular these days, or leveraged buyouts, right? You have these financial sponsors, which most people know them as private equity funds, that they will use debt and then some cash equity to buy out large public companies, and they will do their kind of strategic changes to it, then turn it around and sell it to make a profit. A lot of these companies, when they're very heavy with debt, they need to go through various refinancing, or they need to go through notes issuance. So
in my head, I'm thinking of it like real estate, like they need to rehab almost. They're in disrepair. Are you helping those companies kind of get their shit together, or are you helping companies with even more money buy these problem companies out?
We help them with both. So
both sides.
Yep. We help them with basically these transaction type of activities, with deals, if you will, right? Now, if you have a company that's looking to expand, right, a company that wants to enter into South Africa, wants to enter into, UK, right? They don't want to build their operations from scratch. They want to acquire a local player, and we will help them do that too, right? That's a buy side That's a buy-side assignment where we help with a client to acquire something, right, to expand their operations. Sell-side, buy-side, those are merger acquisition type of deals. And earlier I also mentioned financing type of deals. So if company A, wants to, build a new factory, but it needs cash to do that, right? And they want to raise that capital from the market. They could either raise it from selling more shares into the public market, right? Or raise, some private, equity, private shares, cash from investors, right? Or they can raise debt, right? They can take loans. They can take a loan from a bank, investment bank like Deutsche, or they can take loan or buy, issue notes, right? These are like corporate bonds, right? Issue notes to bond investors. Because in the capital markets, there's both equity investors, which, most of us are familiar with, but there's also debt investors, and they invest in corporate debt. And how the company's capital structure is, it's ranked is that it's from kind of most senior to most junior. And senior just means that it has the highest priority of being repaid, most safe tranche, right? So, if something goes wrong, the company, went bankrupt, the most senior tranche gets paid off first.
Could you define tranche real quick?
Sure. Tranches are different layers of financing structure. So the top layer, you have your secured loan, so bank debt, right? There's obviously various sub tranches, sub layers as well, but in broader terms, it's usually secured layer, right? The secured layer, it's the most safe. Lenders feel the safest. Then it also means that the lenders are not expecting very high return, since they're sitting on top of everybody else, and the interest on those loans that they give to the company are also lower compared to the more junior ones. Now below the secured ones are typically unsecured. So these are layers of debt which don't really have collaterals on them. If the borrower decide not to pay these lenders or these note holders, they don't have to. But if they make that decision not to pay them, the company will go into default, bankruptcy, right? The most junior layer, that's equity. That's the stock that everybody is buying, right? You put $100 or $1,000 or $10,000 of your money into one stock, right? If the company goes bankrupt, you get nothing. Equity gets wiped out first, right? Then it impairs layer on top of it, right? So you're the most junior, you're the most uncovered, you're the least secure. The top layer is the most secured, right? Gotcha. So if you see the stack secured, unsecured equity, equity investors, because they're most unsecured, they can expect the highest return. When you put your money into the stock, right, you expect it to grow like double digit each year, right? Or high flying, you expect to make a lot of money very quickly.
Yes.
But you also know, it's riskier than if you're a lender to the company.
Is that why we are, I guess, retail investors are dumb money, because we have no safety, but also.
I wouldn't say dumb money. I would say that different investors have different appetite. So why is Tesla, a stock like Tesla, so popular? Because it keep on growing, right? Anything that's growing, everybody, they have this FOMO thing. They're like, holy shit, the stocks went up like 15%. If I was in it yesterday, I'd be 15% richer. Then, I'm going to get in now. I don't want to be late, right?
Yeah.
So everybody's chasing after these high flyers. There's a reason behind that too, right? Because these companies are good. Now, we can get into a whole debate about how much these companies are really worth, right? But that's a different discussion, right? Yeah. These companies, by definition, I mean, it attracts, retail investors' attention. It attracts your money, your capital, your friends' capital, your family's capital, is because there's fundamentally something good about it, right? That everybody likes it. Some people may like it more than you do, so they're willing to pay more than you are for a share, right? And that kind of, you have people like that kind of bid up the price. But fundamentally, these companies are still good companies. Maybe some valuation are richer, but they're good companies. I wouldn't say that retail money are dumb money. It's just that you have to kind of know the risks, right? Like, if you're investing in these blue chip companies, then I say, for the most part, you're safe in the sense that you're not going to lose all your money, right? Yeah. You may, if the price corrects itself, it's kind of, if the stock is too overheated and, there's some sell off and it corrects itself, you might lose a little bit, but chances are you're probably not going to lose everything, right? Because again, it's a blue chip stock. the company was the biggest market caps, right? Market capitalization, right? So these are like, companies with 100 billion plus market caps, right? Like lots of capital, lots of customers, lots of revenue. It's not going to just disappear overnight unless there's some fraud, right? I mean, Enron, back in the days,
Yeah.
was also at one point considered blue chip.
Yeah.
Then like some stuff were uncovered and, it went down, pretty
Some
quick.
stuff.
Yeah,
Some
exactly. So as long as there's no like major fraud, I think in today's world, those things are much harder to sweep under the rug now, right? Like the regulators are all over your ass on this, right? Like,
So we can actually probably thank Enron for these tighter regulatory requirements. Are you trying to say that we should actually feel more secure now than before because of
I
the
think so.
regulatory requirements?
I think so. I think especially, being in the US, I think US investors, in my personal opinion, I think US investors are safer, a lot safer than anywhere else. It's because the government and the regulators are on your side. They're here to protect you, right? They're here to make sure that you don't fall into the traps, and they're here to regulate the people who issue you these securities, that they're playing by the rules, that they're making the proper disclosures, so that you as individuals are aware of the risks that's involved.
As opposed to Chinese regulators?
Yeah, I mean, in fact, did you know that in Europe and in China, your reporting are on semi-annual basis? So meaning that your company only has to make a public filing, right? Filing to the regulators every half year. A lot of stuff can happen in a half year period, right? And most people, they wouldn't know, right? Like, so that frequency is less in the US. In the US, it's every quarter, right? As a public company, you have to make a 10Q filing every quarter, to show what's your last quarter results, right? So that low frequency just tell you, like, as an investor in the US, market,
Yeah.
are a lot more informed than the people from other places.
You would think so. I take it as we are spoiled. We are so spoiled that the market is healthy, that it's growing, and that there's regulations in place. And we have to talk on this just because this is what people want to see. We have to talk a little bit more about Tesla. Is Tesla overvalued? And what are you going to say to people that ask, should we invest in Tesla right now?
But again, my personal opinion, it does not reflect any view from my employer or anybody else, my friends or family or nobody except myself.
Yes.
I think Tesla is overvalued. I think Tesla is overvalued because I think of my brief time on Wall Street, I've never seen a company that's valued as this multiple. I mean, you're talking about 100 times, right? Before EBITDA multiple, right? 200 times, 200 to 300 times, LTM, last 12 months period, right? Like that's, some of these multiples are insanely high. And it means that, if you gave the company $100 today, it would take you 100 years to get the money back. Right? Have you thought about that? I mean, like most people, I don't know. I mean, yes, you're investing in growth. So you're thinking that, the company next year will be generating more profit than it's generating today.
Yes.
The year after that, it's growing. But by definition, those multiples are telling you, $100 you give to the company will take you 100 years to get back. Yeah, right?
I think a Tesla bull would say, Tesla is going to be manufacturing such high quality robots with software that we have to buy, with FSD, with Tesla homes, that they're going to be minting money at a certain point, and it's going to be exponential growth on exponential growth. Therefore, that 100 years timeline maybe would only take 10 years because we're not able to process how fast it's going to grow.
Maybe. Yeah, maybe you're absolutely right. I mean, shoot, man. I mean, you got Elon Musk. I mean, this guy freaking makes magic. Like, right? He's trying to send people to Mars, man. That's like
exactly
Star Wars shit, right? Like, dude, I love the guy. In fact, I wrote about Elon Musk in my essay for my MBA application. Right? Literally, the guy got me into business school. Right?
Wow.
So
I didn't know that.
So I have nothing bad to say about the guy. I love the guy. I'm very impressed about what he has done and what he's doing. all I'm saying is just from a fundamental, analysis, financial analysis standpoint,
Yeah.
that I think the company is overvalued. Now, that doesn't mean that I think the company is bad. I mean, the company is great. The company is
Yeah.
great. And
Yeah.
I think, based on kind of where, the research analysts feel they can grow, right? They issue these Wall Street consensus projections,
Hmm.
right? Like various brokerage houses, right? They issue their research reports, right?
Yep.
Kind of projecting where the company will go. Um, and just based on consensus, average of all these predictions, that it doesn't seem like it's going to go exponential. And I think maybe everybody's missing it. Maybe they have something really in development right now that's going to blow everyone away. But I think Tesla did a lot of great things. But I think the competitors are also catching up, right?
Hmm.
10 years ago, like EV, the market is Tesla's, no questions asked. But now you have EV players now are not just focused on normal passenger, like sedans, right?
Yeah.
They're
Yeah.
focusing on like long range transportation, long range delivery, industrial uses, right?
Yeah.
You have all these other sort of players that other specialty players coming into the market, and the Chinese are also investing heavily into EV. In fact, did you know that actually in Shanghai, right? Pretty much all the taxis in Shanghai in Shanghai are EV.
Really? Every single one? Most of
Yeah,
them?
pretty much.
Wow.
Yeah,
I didn't know that.
they're all EV, right? Like, whereas that in the US, it's unheard of. You're not gonna have New York City taxis being EV. Like, where are you
Yeah.
gonna have all these charge stations, right? It's crazy,
Yeah.
right? But no, I mean, China, like they're focused a lot on the environment, and they want to, they know their current trajectory, in terms of emissions are not sustainable. So they're making drastic changes, and they're making very fast changes. And
Yeah.
with that, you have these major cities, tier 1 cities like Shanghai, full of EVs, right? And they will only get better at it, right? Because I mean, China, like it or not, I mean, these guys will do turn around things pretty quickly. So, and they're operating in like a big sandbox,
Hmm.
right? They can test out things very quickly and make corrective adjustments. Whereas in the US, there's a lot of tapes you have to cut through, for you to do stuff, right? So I say Tesla, it's a good company.
Yeah.
But others are also moving in. So
Don't you think they are just too far behind, a lot of them?
I don't think so.
You don't think
I
so?
don't think they're too far behind. I mean, this may sound a little bit silly, and but these guys are making cars, right? Like,
Yeah.
I mean, every other competitors, I bet in their garages they have a few, maybe more than a few Teslas. They're just taking that shit apart and just try to reverse engineer, try to learn everything about it.
Yeah. Yeah.
Right? I mean,
That's interesting. You're basically saying they can compete because they have Teslas. They'll just copy what
yeah.
Tesla's doing.
Yeah,
That's
like
true. That's
what's
true.
preventing them from just going to your store, buy a few Teslas, take it apart,
100%. Yeah.
and see what's going on, right? Like, and
Yeah.
improve on your designs, right? Automobiles, it's more or less a commodity these days, right? I mean, there's so
Yeah.
many of those.
Yeah.
I mean, you're not talking about the Intel chips, right? I mean, shoot, for those type of semiconductor stuff, they can reverse engineer. I think for car components, batteries,
Yeah. Yeah.
like. They're not the first people to make all these car components. And I say Porsche, BMW, Mercedes, and
Yeah.
maybe a lot of the American companies probably make better car parts. Tesla is really good with batteries.
Yeah.
They're very good with all the electrical components. But those components, can also be copied. Can be learned. So
Yeah. Yeah. I think they could definitely copy it. But I feel like it'd be hard to copy Tesla's manufacturing at that scale, because Tesla has been building factories completely from scratch. They
yeah,
have their metal casting and reducing parts.
yep,
So, I mean, Elon says it all the time. It's easy to build one prototype, but it's much harder to build
yeah.
the
I
machines that
agree.
build the machines.
Yep.
So I think that's their big advantage. But I agree with your point too. Yeah, they could definitely copy
Yeah, it could be. And did you know
Yeah.
that this whole manufacturing thing?
Yeah.
Well, man, this goes back almost 10 years ago when I first learned about TPS. This is
Uh-huh.
Toyota Production System, right?
Yes. Yes.
Yeah, assembly lines and Kanban, all this stuff all came from Japanese, man. Like, and the manufacturing in the US start adopting it and improving on it, right? I'm sure there are other auto players that are poaching Tesla employees, right? Like trying to understand their manufacturing process, trying to understand like how to make things better. And
Yeah.
everybody's, are looking ways to improve efficiency. So I think it's a little edge that everyone have in this industry. It doesn't take a lot for others to catch up. I think, again, this is not like ultra high tech, thing that's crazy to make. I mean, I don't think many people can copy Tesla's, SpaceX rockets. That's a whole different story. I don't think anybody can copy that quickly, but I think to copy some cars and ways to make the cars, to copy their tooling, their, production lines, how they, sequencing their, build outs and stuff. I think those are probably easier to do than others. Exactly. One thing Tesla does have going for it is its brand equity, right? Like everybody recognizes Tesla. Reluctantly, I'm going to say that Bitcoin is going to stay. I'm going to use your show to advertise one crypto that I've been looking at.